Shares of Goldman Sachs gutted today as the investment bank hosted its second ever investor day. The company's consumer business and focus CEO David Solomon saying the bank is exploring strategic alternatives, suggesting a possible sale of the remaining parts of those platforms. Solomon also renewing focus on the company's asset and wealth management business, saying they would be the growth engine for the bank. So we thought this would be a good time to grade Goldman. Guy.
Grade Goldman. I liked. Well, as Tim mentioned last night, it's very difficult for me not to give them an A, but I actually thought they did a good job today. Between John Waldron and David Solomon, I think they basically laid out a plan for growth. They have a very now, in my opinion, visibility in terms of their earnings stream with asset management and banking. They still dominate in those areas. I think it trades at a trough multiple to book value, which I think is around 305 or so. You put a 1.5 times book on this, and you're talking about a stock that should be north of $400. During David's tenure, as I mentioned, the stock has effectively doubled. I don't think people necessarily love him, but I also think there are a lot of people with bows and arrows out there trying to knock him off, and I think that's unjustified.
So you give them an A.
A.
Julie, where do you stand?
It's a C+ for me. You know, obviously
that's failing. That's failing.
That's failing in Mel's house for sure.
Look, obviously, banking and trading is an A+ business, but it's a cyclical business, and that's why they've been trying to diversify away from that. But everything that's kind of happening in consumer banking, it's been a mess. It's disappointing to hear David talking about how, you know, they misunderstood the competitive advantage. If you think about it, right, that's what they advise clients on, competitive advantage. And so it looks like they won't even take their own advice when it comes to their consumer banking business. And then if you look at wealth management, you know, like in terms, if you look at how their asset managers have been performing, they have a slide in their deck that says 71% of their asset managers and equities are outperforming, you know, 50% of their peer group. 50%. That's all, they don't even have, not everyone is even performing that well. That's like that Anchorman line that's like, this works 60% of the time, all of the time, right? Like, that's just not very good performance for them to be touting. And if that's going to be the economic engine for their business, I worry that they don't really have the right pieces in place. So, yeah, I'm underwhelmed.
C+. Tim?
I'm going B+. I don't think it's the second investor day they've had in their history. Usually at investor days, you're there to show up. There's good news coming, and there wasn't a whole lot that they could tell us. I mean, the wealth and asset management business are where you're going to get the multiple expansion. The fact that, I said this yesterday, they needed to deliver on the return on tangible equity and the efficiencies, you know, 15 to 17%, 60% is what they needed to say. It's what they did. And I think medium to long term, there's nothing wrong here.
Yeah, I'll just give it a B. As far as I'm concerned, as long as I've been in the business, betting against Goldman over the last 25 years has not been a great thing. They make money in bad markets. They make money in good markets. Maybe this is a little bit of style shift, but the fact that they're kind of facing the music, I think David Solomon's going to figure this out.